Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. We're going to dive into Twitter, see what people are sharing on social media like I normally do. I'm going to interject my financial opinions as we go. They're going to be related to basically three topics: commodities, wealth building, and financial topics. Let's dive in and see what people are talking about today. You can follow me at finding_finance, and you can join our community at finding-value.com. We do have a training session going on at 8:30 a.m. Mountain Standard Time, Wednesday or tomorrow, coming up. Come on, Homebuilders still looking like beasts. Lennar and DR Horton are examples here. We've got Lennar Corp. Look at that thing right up there, ready to break new all-time highs for Lennar Corp. Let me this in there so you guys can see it. Sorry about that. Right up there, looking for all-time highs. DR Horton, the same thing. It's the same chart, ripping to the upside, taking a step back and just seeing the magnificence of the entire bull market here. Same with Lennar Corp, all the way back to the 70s. 70s, this was split adjusted 11 cents, and we're all the way up at about 150 bucks. Talk about a nice return there. So those look fantastic. And I think, you know, we did not see this when we had the great financial crisis. Home builders rolled over in 2005 and were going far, far lower in 06, 07 before that great financial crisis. These are all making all-time highs, the big home builders that are well known. So I don't think there's a chance that we're going to get a great financial crisis, at least not from the housing market. No way, no way. Previous bull market fractal overlaid on top of URA showing the moves are similar. The fractal is Comstock or CRK, a natural gas stock from last bull. What do you think? This is the fractal I've got overlaid. I overlaid it perfectly on top of it. We are moving on up, and I think this is what something could potentially look like when doing this. And it's almost the same fractal, the way that this has fallen and the way that this is going up. Very similar. And I think that's probably what the case is going to be. I think we're going to see a pretty big bull market in uranium all the way out to the late 20s and maybe a blow off top in the late 20s somewhere. But that's the fractal squeezed up into this mix here. And then it is, I put the top of it here to the bottom here. And it matches quite well. And this is what the fractal overlay turns out to be. And you can see that we are basically breaking out and mimicking this type of move. We'll see if it still tracks it. I'm highly interested, but the human psychology, the herd, created this fractal from last commodity bull market. Uranium futures pricing. I say notice the big gap we are entering on the left-hand side of the chart, not much resistance. There's a big gap here. It's bearish on this side as we fall, but notice how this just fell off a cliff here. It's a cliff. Boom. And then we came into this large bearish bottoming pattern. A lot of the times the right-hand side mimics the left-hand side because that's where your resistance levels are at. They're at these turning points where a lot of stock is traded. We're at 92.60, and that's right on the tip where our last form of resistance is at. I want to see what we do between this gap here. I don't think we're going to gap up, but it's going to be interesting to see how much resistance is left here when we pass through 92.60 of where we are at today. So I think it looks very bullish for a big move to the upside for uranium futures. Mike Simonson says, I just realized that my weekly video titles have all sounded pretty bullish over the last several weeks. I guess this week is no exception. The U.S. real estate market data keeps turning in strong results. So let's go to these results here. Home sales are increasing every week. Inventory is inching up. Home price signals are increasing too, which is all good things. We can look at the data here that he's got. I'm going to skip all this over here. You can see that this is the total count homes pending contract, 247,000 single-family homes in contract, 4.25% more than last year, including 36,000 new contracts, 13% more than last year. So that's good. We've got 2024, you can see new listings are coming up a little bit compared to previous years, 9% more than last year. We've got total inventory for sale. It's down a little bit off here, but we're above um, previous years, just slightly. So that's looking good. And then percent of properties with recent price reductions are in the normal and slightly below 2023, which means that people aren't reducing the home prices as much as they did in 2023 of January. And we're in the normal zone. So maybe perhaps um, the market can speed up here a little bit. And I'm curious to see how interest rates impact this market. I think we're going to get more home sales volumes for sure in 2024 than we did in 2023. That's my guess. I think there's going to be more selling and more buying all around. Now, I keep coming back to this, guys. This is what makes me so bullish on oil on a longer term play. Not in the short term, but in the long term. Permian Basin and Eagle Ford oil recoveries have both fallen by 30%, and the Bakken has declined by almost 20%. Those plays accounted for 2/3 of U.S. output in 2023. That means that U.S. production will decline at some point in the near future. So, are we going to get this decline here? Because if we get a decline, I think that this is one of the great areas that we got the majority of growth of worldwide production. And if we are declining and the declines are as rapid as we see here, that's pretty crazy. So it's interesting how oil's trading and how we're seeing kind of this type of data come out. So the Permian Basin production accounted for 46% of U.S. domestic supply in 2023. Other tight oil plays accounted for another 22%. What will happen when tight oil begins to decline? And I know we're talking about declines, and everyone thinks, oh, we've got an oil glut. We're just awash in oil. I think demand has been pretty robust. And now I want to look to see what supply looks like in America. I know supply has come online from other parts of the world, Venezuela, Iran, all those kind of areas. But I'm interested to see how this plays out here. Oh man, hit the wrong button there. Sorry. Coming on down. We've got Tavi here. It's remarkable how mining stocks continue to be highly resilient despite the weakness in gold prices today. The valuations of these companies couldn't be more distressed, and we are likely near a major bottom. I hope so. There's that downtrend line that we haven't broken yet, but I hope we break out. I have some positions in it, and I think I will even increase positions depending on the accounts I get. But yeah, I hope we get a breakout here. This guy says a home sold in 1996 for $180,000 is now worth over $736,000. That's a $556,000 increase over 28 years, or about an 11% annual return. This beats the annual return from the S&P 500, which was about 9.9% during the same time period. Who said paying off a home early was a bad idea? Well, I would say it's a bad idea now because I think the inflation rate is greater than your interest rate that you have on your mortgage if you got a mortgage if you refinanced in 2021. So, I mean, let's say let's just say that this were to occur again. 180 goes to 736. And I'm just going to pull up a mortgage calculator for the heck of it. Let's say I bought that $180,000 house back then in about 30 years ago, roughly speaking. And they had a 2.75%. So they put some money down, 20%, let's say it's 40-ish thousand bucks they put down. They have a loan for $140,000, just so you guys know. And then your interest rate is 2.75. Your monthly payment is $572 a month for your mortgage. If you had purchased that house in 1996 and scaled it today, like we did, and you purchased it in 2021. So 30 years from now, it's going to feel like you've got a monthly payment of $572. 572 is not much at all. It is not much at all. So, like, if I had that payment, which my payment isn't like too much more than that, it's about a little less than double that. But 20 years from now, I'm going to look at that and be like, that's like a meal. It's like probably like the cost of dinner. It will be in the future 20, 30 years. So that's why I'm not so keen on like paying it off as fast as possible. I'm gonna let inflation just eat the thing away. I'm gonna let it eat it away. So I wanted to give an example, and it's very important, in my opinion, to look at your cost side and see what you can do on your cost side. If you can lock in a 30-year mortgage at a very low rate with a very low payment, I see that as an asset because you're locking in some of your largest costs that you potentially have. My largest cost right now is food costs. My kids are starting to eat like beasts, and that's really where my costs are all at now. It's all in food and stuff like that. I really don't spend that much on gas. It's food, and then the home price, the mortgage. It's not too big of a deal. According to Gas Buddy data weekly, U.S. gasoline demand rose 2.3% versus last week. 2.3%. So, when we look at it from a demand, counting barrels perspective, the demand is robust. It is strong. So it's not a demand problem when you guys are looking at oil and some of this stuff. Because I know some people are pretty bearish on oil, but I do think the supply side's got some boosts over this past year. It says, I know this may sound overly aggressive, but I encourage you not to push the sell button on your oil and gas stocks, except possibly a select few, as both oil and gas prices are starting off this morning with a large correction. As always, this too shall pass. We did see some buying pressure throughout the day, but I agree. You just have to be patient, and we're going to get some of these nasty, big selling pressure days. The thing that gets me, or the thing that I look at, is how did the equities perform in relationship to the underlying commodity? The commodity got sold off pretty hard, and the equities didn't sell off as hard. So that generally, to me, looks like we've got some strength in the equities and people are accumulating it. This is just a classic own commodities. Jeff Currie went out, did an interview, and he said the setup for all of these markets is better than it was last year. And if central banks proceed with interest rate cuts, you're teeing yourself up for a fantastic 2024. I hope he's right. I hope we have a fantastic 2024 in commodities. I even think the overall stock market could get going here. Uh, with fiscal spending as high as it is, I'm still amazed that they're running the deficits like they are. That's going to be inflationary. Demand for raw materials is at record levels. Inventories are low and spare production capacity is largely exhausted. This is just classic own commodities, says Jeffrey Currie. Another quote that I wanted to share with everyone. 20% decline in U.S. rig count will eventually catch up, even as firms become more efficient by targeting longer lateral wells, speeding up drilling times. Fewer frac crews are available, and companies further ran down their stock of drilled uncompleted in 2023. So U.S. shale growth faces a slowdown and unexpected surge in U.S. crude output last year is unlikely to be repeated in 2024, offering some relief to OPEC's ailing efforts to prop up oil prices. I do follow the drilled uncompleted wells, and they are down quite a bit versus the inventory that we had built earlier. So I'm real interested in how energy service companies react to the decline in drilling, and then I think we're going to get an increase in drilling activity here. At least that's my hope. One more great chart, and I like sharing all this. It says the mother of all topping patterns on crude oil, question mark, or simply finding support at long-term trend line before a move higher. I say higher, but this will be one to watch. I don't think this is a head and shoulders. I really don't. But the RSI is kicking on up, and I don't really watch the RSI all that much. The one thing I'll say is this is the exact pattern we saw in the lead-in pattern for the last commodity bull market. It's the same pattern, guys. So a lot of these guys that are technical chartists, they look at this and they say it's a head and shoulders. They did the same thing in dry bulk shipping. A lot of the dry bulk shipping companies have this. They said it's head and shoulders. We saw technical analysis guys come out and said that there was head and shoulders on uranium, and a lot of those stocks turned out that it wasn't. And then even they came out on some of the other sectors saying it was head and shoulders, and it was not in commodities. I'm guessing that this is not. I mean, obviously, we'll see if it is, but I'm going to say we go higher, just like this guy. I say higher, but this one will be one to watch. I agree with him. The best thing a human can do is to help another human being know more. I like that. That's why I set up the website. The best thing you can do is help someone else, and it feels like I'm just I like doing it. It feels like I'm giving back, and hopefully people are getting a lot from the website. Jim Cramer remains undefeated, was bullish on Boeing 2 days ago before the FAA grounded the Boeing 737 MAX 9. How does this keep happening? I don't know if he's doing it on purpose, but maybe he's trying to create demand for his buddies to offload too. In the book, Jesse Livermore, The Reminiscences of a Stock Operator, he talks about unloading a lot of shares that he was going to unload for a company that somebody wanted to unload to. And he needed to create volume. And there was an event that occurred. I can't remember what the event was or is. It occurred, and all this volume came in, and he unloaded all the shares onto that volume. And maybe Kramer is creating that volume to offload shares onto. I don't know. This is Forces Metals peaking out of that long-term resistance trend line. I love it, guys. Look at this. We're coming up and breaking that trend line on Forces Metals. We got a long way to go to the upside on some of these uranium stocks. Record oil demand, check. But inventory is low. Some products, sure, but overall, only if you're counting the SPR, which you shouldn't be. Spare capacity is low. The largest OPEC ex-COVID production cuts since 08-09. And that is in response with oil demand at record, inventories and spare capacities low, says Currie. And yeah, don't look at the SPR, guys. That just doesn't exist. We just depleted the crap out of it, but don't look at it. The worst in home sales is over. The worst in housing affordability is over. This year will be a year of home sales recovery, says Lawrence Yun, chief economist at the National Association of Realtors, told Fox television stations. Do you guys believe that? Let me know in the comments section. Do you believe that the worst in housing affordability and home sales is in fact over? I kind of do. I kind of do. Oil is the most investable space out there, according to Jeff Currie, Goldman Sachs partner alum. We've got Grady here. Silver and sugar track each other quite well for the very big picture. Both are up against massive resistance right here. So we could see a synced mega breakout, which would further evidence the second inflationary wave is coming. And he's got sugar and silver overlaid on each other. The mother of all legit looking massive twin cup and handle patterns. What is going on here, guys? Are we going to send this thing to the moon with house prices? It sure looks like it. And that's where I've got for today, guys. So that's what I've got. I'm going to share. Give me a thumb up on the content, guys. Um, subscribe to both the channel here and the website if you'd like. Don't forget that Wednesday, we've got that training session coming up. And that's what I've got for today. So hopefully you have a good day. I will catch you next time. This is Finding Value.